So on part one of the video, I talked about FHA loans and the loan limits, but on this part two, I want to talk about conventional. Conventional is probably one of the most popular loans that we're seeing in today's market in 2023. Conventional loans, you know, we've done a video about it saying you don't always have to put 20% down on a conventional loan. They have conventional loans out there with as little as 3% down. The one that we probably see the most common is 5 to 10% down. Now, the less percent you put down, the higher interest rate you'll probably see. And I'm not saying it's gonna go crazy, that you're gonna be jumping up several points just because you put less money down. But if we see that a buyer is having a little bit of trouble securing a house because of an FHA offer, sometimes we do move them over to conventional if they qualify. And this way we're trying to get that home for them. Now with conventional, if we look at it, the more money you put down, the less mortgage insurance you would have. Mortgage insurance is an insurance that you pay that if you stop paying your mortgage and you get foreclosed on, that mortgage insurance covers a portion of that mortgage. But the more you put down, the less that mortgage insurance becomes. The threshold is about 20%. So once you put 20% down, you no longer have to pay mortgage insurance. So if right now you have a conventional loan and you're paying mortgage insurance, call your bank and ask them, can you send me what is required in order for me to get rid of mortgage insurance? We've actually been going back to clients in the last 2 or 3 years, and we've been updating them on the equity that they have on the property and telling them, hey, now's a good time that you could probably get out of your mortgage insurance. So in 2023, the conventional loan limit on a single family home in Palm Beach County got raised to $726,200. So if you qualify for a conforming loan in Palm Beach County, it doesn't mean you can't go over $726,200. That means you can borrow that much money. So as long as you're putting money down, you can go higher than that price point and still put down as low as 3% or 5%. So we don't want you to feel that, hey, you've been priced out of the market. So something that we do with a lot of buyers, once they do qualify, we don't just go based off of that amount that they were pre-approved for and go find them the first house. We like to break down those numbers for our clients. Just because you qualify for a high amount doesn't mean we have to go spend that much. Once we break it down, we make sure that you're comfortable with it. Now, a lot of the pros with the conventional loan is you become more competitive in this low inventory market that we have. Another pro is you don't have to go put down 20%. We can go and bring it down on the amount of money that you put down. The only cons that I could say that I could see with a conventional is your debt to income ratio has to be lower, so there is a threshold on that. And if you're curious on what that is, I'll let the lender break that down for you. And also another con could be the less money you put down, the higher that mortgage insurance gets. And again, all of that is going to be based off of your credit score, your debt to income ratio. We always recommend talk to the professional, talk to the lender, talk to the person who does that, which we can connect you with to make sure that you feel comfortable when you're moving forward. So don't forget to drop a comment. I look forward to seeing you on the next video, and thank you always for watching.